Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So, welcome to a new week and a new month of trading. So, we'll be looking at a couple of things that we are expecting in the markets this week. We'll try to understand how these things may influence or impact the markets. And of course, we'll be doing some technical analysis to try and understand where prices might be headed next. And once we go through this, hopefully everyone will approach the markets from an informed perspective. So as usual, I'll begin with a disclaimer. So if you can hear me clearly, make sure you say hi on the live comment section. Remember, these sessions are not investment advice. They are not a recommendation to trade. So always do your own due diligence, do your own research, and always practice proper risk management. So how is your week going? And good morning, everyone. Good morning, Brian Kinyanjui. Thank you for your response. So let's get things started. I'll be starting with something pretty simple. And these are tweets that I just made a couple of minutes ago. And it's basically a summary of the key events that we are expecting to see in the markets this week. So once we go through that, then hopefully we'll be able to understand other things that we will be expecting to see in the markets this week. So that everyone can be able to see this. So I'm literally sharing my screen. So I'll try and talk about the key highlights in the markets or top things to know in the markets this week. So first things first, if you are interested if you are a stock market trader, you know that there is a couple of companies that will be reporting their earnings this week. Over 90% of the companies in the S&P 500 have already reported their earnings. So there's only a few companies remaining before we close the earnings season for the last quarter of last year. And now we start looking at the first quarter of 2024. So the top earnings this Monday will be a company called C Limited that basically deals with internet connection infrastructure. Then on Tuesday, we'll be having GitLab, Box, ChargePoint, CrowdStrike, Neo, Nordstrom, as well as the Target Corporation. So a key focus will be on the Target Corporation. It's a big indicator of US retail trends. Then on Wednesday, we'll be looking at Abercrombie & Fitch. We'll look at Foot Locker, JD.com, as well as Victoria's Secret. Then moving on Thursday, we'll be looking at American Eagle Outfitters. We'll be looking at BJ's, Broadcom, Costco, Gap, Kroger, DocuSign, and MongoDB. And there are no notable earnings for this Friday. So as for Forex traders, we know that we are very much interested with monetary policy decisions and the direction that central banks are taking. So we'll be paying a key focus on interest rate decisions. So we will be looking at two major central banks that will be making interest rate decisions. So the first one will be the Bank of Canada, which is expected to hold interest rates steady at 5.0% on Wednesday. And this will be happening at 5:45 p.m. East African time. So later on at 6:30 p.m. on the same day, we will see the Bank of Canada press conference. So I believe that a lot of investors will be focused on the press conference more than the news announcement, especially if there is no sudden surprises in the interest rate decision. So if the Bank of Canada decides to hold interest rates steady at 5.0%, then investors will be focused on the future monetary policy, where the hints could be coming from the Bank of Canada press conference. And this is expected to increase volatility in all Canadian dollar pairs. So later on in the week, and that is on Thursday, we'll be looking at the ECB, or the European Central Bank, which is also expected to hold interest rates steady at 4.50%. So this will be happening at 4:15 p.m. East African time on Thursday, And then at 4:45 p.m., we get the ECB press conference, where in this case, we will also be looking for hints on future monetary policy coming from the ECB. So on inflation reports, we'll be expecting a couple. So the first one will be from Switzerland at 10:30 a.m. I think this has already happened this morning. Then we'll get Japan's data on Tuesday at 2:30 a.m. East African time. And then inflation report from China on Saturday at 4:30 p.m. East African time. So as for job market reports, we'll be looking at two major economies. The first one is the US, so it's the non-farm payrolls week. So we'll be getting the private sector non-farm payrolls, or what we call the ADP non-farm payrolls, as well as the JOLTS job openings report on Wednesday at 4:15 p.m. and 6 p.m. East African time consecutively. So the key focus for traders on the week will be the official US non-farm payrolls data, which will be due on Friday at 4:30 p.m. And this is expected to cause volatility for all US dollar pairs. So at the same time, on Friday, still at 4:30 p.m., we'll be getting Canada's job report, which will show us the rate of wage growth, the unemployment rate, and the number of jobs created in the last 1 month. So this will be very important for every trader. I think we should put a keen focus on this one. So there will be a couple of speeches from various central bankers. So I literally summarized the most important ones. So the first one will be from Bank of Japan governor, who is Kazuo Ueda, who will be presenting a speech tomorrow, that is on Tuesday at exactly 7 a.m. East African time. Then we'll be having two speeches later on in the week from Jerome Powell, who is the head of the Federal Reserve Bank of the US. And he will be presenting a speech on Wednesday at 6 p.m. and on Thursday at the same time, 6 p.m. East African time. So those two speeches from Jerome Powell have the potential to cause high volatility in the markets. So as for price movements, we have seen two major price movements this morning. So one, the Nikkei 225 index broke a level that was last seen in the 1990 to hit a new all-time high of $40,352 per share this morning. So after it hit that level, we have seen some pullback, but the Nikkei is expected to continue cruising higher. So still on price commentary, Bitcoin's bullish momentum continues this week as it attempts to break its all-time high. So its all-time high was slightly below $69,000 per Bitcoin. As of today, this morning, it hit 64,266, and there's that potential that it could break and get to the all-time high by the end of the week. So that's a quick summary of the key events that we are expecting to see in the markets this week. So next part, I'll be talking about the Jerome Powell's speech. So there's this article from Yahoo Finance. It has a subtopic called Fed Fodder. So I'll do a quick highlight of what we're expecting this week. So the Federal Reserve Chair, Jerome Powell, is set to deliver his semi-annual monetary policy testimony to the House and Senate beginning on Wednesday. So investors will listen closely for Powell's updates on the overall state of the US economy, the fight against inflation, and when the central bank may begin cutting interest rates. So the good thing about these speeches by the Federal Reserve Chair Jerome Powell is that in this case, he's not presenting to journalists. So he's basically obligated to answer all the questions that are raised by the Congress members. So when these Congress members are asking questions, they are basically looking at the economy, they are looking at the regions of the US that they represent. They'll be asking specific questions, and normally the responses to these questions tend to cause a lot of market volatility. And at the same time, as we know, these questions can be really tricky, and Jerome Powell is really good at answering questions. So sometimes he will deflect, but when you follow this live, you will see the key highlights and compare with how this impacts the markets. So the biggest question that investors have had this year is whether the Fed will be cutting interest rates and when that will be. So far, nobody knows, because the key indications that Jerome Powell and his FOMC committee have been pointing towards, including the inflation report, they have had an uptick indicating that the inflation is sticky. If you look at the economy of the US, it has been strengthening. If you look at the labor market conditions, they have been strengthening. And as a result, there is an uncertainty as to whether the Fed will be cutting interest rates at all. And if the Fed decides to cut interest rates, nobody knows when it will be doing such. So there will be very important speeches that will help create a narrative for the US dollar traders going forward. So that being mentioned, let's move on to something else. So here is still another summary of the week ahead. I don't think there's anything we missed on this one. Just trying to scan quickly to see if there's anything new. Yeah, so just a view on China. So in China, the National People's Congress will start on Tuesday, and markets will pay close attention to announcements of fresh stimulus measures to prompt up consumer demand and regulatory crackdowns to prevent further selling in the country's equity market. So on the data front, the trade balance for the first 2 months of the year will take center stage, with both export and import growth set to show a slight uptick. Also, investors will monitor the Kaizen Services PMI. Japan is due to release its January current account, while a busy week for South Korea includes February's inflation print and PMI data. So elsewhere, the Philippines will divulge February's inflation update and January's unemployment rate, while Malaysia will choose its new policy rate with attention to weakness in the ringgit. So in Australia, the fourth quarter GDP release will take the spotlight, with consensus estimates suggesting a steady growth rate. So investors also await the trade balance, home credit, and building permits for January. So those are the key highlights for the week. And now, if you go back to the economic calendar and you focus on today, remember we are trading today, not tomorrow, and we have these sessions happening every day, Monday to Friday, starting from 11 a.m. So on Monday, we have had quite a number of data points coming in. So overseas trade index for New Zealand was worse at negative 7.8%, down from negative 0.6%. So capital spending in Japan is really high. It went up 16.4% quarter over year, and monetary base year over year was up 2.4%, which is a drop from the previous 4.8%. So MIA inflation gauge in Australia slowed down to negative 0.1%, basically showing the potential that inflation could be dropping in Australia. So job advertisements were down negative 2.8%, showing that the job market conditions were softening, and building approvals were also down to negative 1.0%. So as for CHF in Switzerland, I'll try to refresh my tab. So consumer price index month over month was up a staggering 0.6% compared to the previous reading of 0.2% and, of course, the expectation of 0.5%. So this basically shows an uptick in inflation in Switzerland. So we'll try and go deeper into the data. I'll use the trading economics calendar, and then we go through it together. So I'm trying to switch the tab here. Kindly give me a moment. This was at 10:30 a.m. I don't have any data here. So in case this happens to you, simply just go to countries and then add the required country. So in this case, we are looking for Switzerland. So you select it, then you save, And now when you go back to the calendar and check 10:30, then you have data for Switzerland. So inflation year over year was up 1.2%, down from the previous reading of 1.3%, but still significantly higher than the projection of 1.1%. So CPI for February was 107.1, up from 106.4. Of course, inflation rate month over month had a big jump of 0.6%, whereas the forecast was 0.2%, meaning that inflation is on the rise again, which basically dampens the outlook of the Reserve Bank of Switzerland, SNB, basically considering cutting interest rates in this cycle. So it might have to hold for longer before cutting interest rates, and this tends to be bullish for the CHF. So now we can check the markets and see how the markets are reacting. And once we cover that, then hopefully we'll be able to make big progress. So there's a good question from J Squad. I'll be responding to that, and thank you for the compliment. So good morning, Lamik and Yasmin, as well as Johnson and Willie. Hello, Molenga. I can see Rose Commander in the house, Maureen, Isaac, and Brian. So thank you guys for joining the sessions, and your comments are very much welcome. So next we go to the MetaTrader 5 trading application and then try to understand where the markets might be headed next and what is in store for us for Monday trading. So the first chart we have here is the dollar index, which is basically showing some very strong weakening coming in from last week's movements. So I'll try to zoom in so that everyone can see the full screen. So the dollar index has been on a downward shift, I would say, for the last 2 weeks after hitting a high of 104.838. So we went all the way down to this level here, around 103.17. Then there was a huge jump as the dollar index recovered, and then it's now trading in a slightly bullish channel. So if you look at my two short trend lines here, then you'll notice the momentum we are seeing in this market. So clearly, we can say that for the last, I would say 7-8 days, there's a slight bullish momentum in the dollar index. And now we are testing the lower trend line, and hopefully the dollar index will be bouncing from here and potentially headed higher. So we already saw this move happening. And now potentially, if the same pattern continues, then is the dollar index now headed higher? And that recovery could mean something for the markets this week. So looking at the USD JPY currency pair, it has been ranging for the better part of the last 3 weeks. Then last week, there was this strong yellow candlestick, green, highlighted in yellow, where the dollar basically crashed all the way down against the yen, but then it made an immediate recovery. And from here, we had a projection that price would now head to the previous high of 150.866. So we had a good progression from here. Then on Friday, the market continued higher, but did not get to our target and pulled back downwards. But then today we have seen the US dollar continuing to strengthen against the yen, and the market still remains within this range. So there's still some chance that the dollar will continue pushing higher and potentially get to the previous high, where we have a major resistance of around 150.866. So I expect this to be met this week, even though we are seeing some pullback here. Yes, the dollar may be struggling today because we don't have major news impacting prices. So potentially, I expect the dollar to continue making a rally. And if that continues, then the target is the previous high. And from the forward chart, it's 150.866. So as for Euro USD, we had this range last week. And it's a 2-week range where we can say generally the euro has been moving sideways against the dollar. But then since Friday's price action, we have seen a very strong bounce from this support, and now the market is headed to yet another resistance area. So from what we are seeing here, it seems like a market that hit a major resistance area. So there's several times we have seen the market do this. So you can identify this area as resistance. You can also identify this area here as an area where the Euro USD found resistance and pulled back downwards. And now it's happening again. So depending on the outcome of this candlestick right here, if we see at the top of the hour, the Euro USD closing lower than the green candlestick, the just previous candlestick. So if it happens to close lower than this green candlestick, then it will be an indication that the price has rejected that level and potentially will be looking to trade back downwards, in this case betting on a strong dollar against the euro. But then if the market crosses near or above this area here, then we should be looking for signs that the market might be headed higher. So it really depends on the price action we observe around the current price level, especially with regard with the day's high here. So it's a similar thing with pound USD. So for pound USD, we have had a very strong bearish trend line acting as a resistance here. So it has been tested a couple of times, I would say 5 times. And now the market has made a strong rally. Didn't get to our target last week. Remember, we had projected that this price would drop all the way down here, but then it dropped here and then further downwards here on Friday, and then moved back upwards. So now we are at the opportune moment where the market is now testing the trend line yet again, and this could cause some volatility, and this could present a nice trading opportunity depending on whether it's a reversal or a clean break. So the market can make a clean break and we trade higher. That means bullish positions. And if there's a strong rejection here and the dollar recovers, then we move back downwards. So this might be an interesting area to use as a target if the price was to bounce here, find resistance, and drop back. So this was a significant low in the market. It could be used as a target. So on the other hand, the top of this trend line is the other target. So in this case, if you have a weak dollar and the pound continues trending higher, then in this case, the target is the higher end of this bearish trend line here, which is 1.27093. So as for USD CAD, we have had a very strong acceleration last week as oil markets were weakening and the dollar was strong, where we eventually got to 1.36052 price level. So from the 4-hour chart, this is how it looks like. So it's still a bullish momentum. But then from this bullish momentum, we notice that something is shaping up here, basically showing that for this period, and I would say for the last 3 days, the overall momentum for USD CAD is kind of sideways. So with this kind of sideways momentum, you want to bet on the longer term trend. So the longer term trend here is a bullish momentum. So we can say that over this period, the overall direction for USD CAD is this way. So now, knowing that this is the momentum we're expecting in the markets, then you want to buy when prices are really low and benefit from the upwards movement of price. So for now, I would be patient to wait for the market to retest the day's low, Friday's low, Thursday's low for an entry. But then also, if we see evidence of bullish momentum, then the target is the previous high around 1.36052. So I know all of you guys have had questions about gold. I have had those questions too. And there was a very strong momentum happening on Friday last week. And remember, we had done this projection here. So we went through the diamond formation here and decided that if the breakout is on the upper side, then we go long. If it's on the lower side, we go short. So in this case, the price made a big momentum upwards, got to our target level of 2047. But then we expected a pullback to retest the diamond before continuation. So what happened is that there was a slight pullback and then the market rallied all the way up and got to the 2088 price level. So this means that gold is very close to hitting another all-time high. So the last time we had an all-time high was with this candlestick where we had a high of 2182. So now we are looking at a high that we are very much familiar with. And this is the high that we saw in May last year. So it's also a very familiar high if you go a little bit backwards, and you notice that there was yet another high, and this was in March 2022. And if you keep zooming out, you'll notice that there's also yet another high, and this was in August 2020, where the market reached 2049. So the market have crossed above this high, above the second high, and above the third high. So what we are looking at here is now another high that was formed earlier in the year, and gold is looking to break above this high and move towards this other high. So this is all-time high for gold. This is the highest price that gold has ever traded, 2181. And now, seeing the momentum that we saw last week on Friday, and now the price of gold is retesting these levels, there is a very strong likelihood that this bullish momentum continues. So if you count the number of candlesticks here, and these are daily candlesticks, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So out of 12 days, we have had only 3 red days, and they were not that significant. So it shows a very strong bullish momentum, similar to what we had here. Then the market closed all the way up. So I expect that if you're a beginner, your initial reaction when you see a strong bullish momentum is to look for a reversal. But the idea is not to face the storm. The idea is to ride the storm. So in this case, there's a good likelihood that we'll be seeing some further upside momentum in gold, and this could be headed all the way up to 2181. However, to keep expectations in check, I think it would be better to use something else, some other kind of scale. So from what I'm seeing here, it's price moving from here, going down, and then back up, and then down again, and then back up. So in this case, if there was to be a breakout, there is a likelihood that the length of this deepest cut here, all the way up to this, could be replicated, and the market moves a similar kind of momentum from this low here. So there's still that potential that gold could form another all-time high and potentially even get to 2,270. So for now, it's just about being patient and looking for this break. So notice the price level here, 2088. It's the same price level that gold topped on Friday. Today, it's currently testing here, and it could potentially rally above that, and that could happen in a few hours from now or even a few minutes. So you just have to be patient, wait for the break, and then go for it. So US equity indices continue this bullish momentum. I remember last week we were caught up in this flag. I discussed this flag for the better part of the week, waiting for the eventual breakout to happen. So the breakout happened on Friday. The market retested as per the book technical analysis. I think we have been through this for a majority of the people who have been attending these sessions, that the market will potentially break, retest, and then make a big move. So this happened with the Nasdaq, and we could be seeing a continuation of the same. So there's a likelihood that the Nasdaq will be hitting yet another all-time high, and this is following the bullish momentum we are seeing from the rear end of last week. So as of today, we don't have much happening. So we just have to monitor this area for a while until we see where the momentum heads. So if the momentum heads higher, then we continue squeezing bullish positions. So for the Dow Jones, we had a similar flag. The market broke towards the upper side on Thursday, pulled back, retested, and then continued moving higher. Retested a second time and then made a rally. So now it's in order to assume that the price is now headed higher. And if you use a smaller time frame, like the 15 minutes time frame, you'll notice that a certain pattern is forming up here, where the market is forming higher lows as well as higher highs, and these are following these two trend lines. So in such a case, we know that the best outcome or the best area is to wait for the market to get here so that you can now start looking for those bullish positions towards the upper side. So it's more likely that the Dow Jones could drop the lower trend line and then identify a bullish position from here. So For the S&P 500, it seems really similar to the Nasdaq. So after the sideways momentum here, okay, let's bring it back home. So the breakout happened on Thursday, and then a pullback, a continuation. So some pullback early on Friday, and then a rally, and now the market is resting here with little to no volume. So we haven't had much of a market activity today. But then eventually volatility will pick up, and I expect this bullish momentum to continue and the S&P 500 to print yet another all-time high. So oil prices managed to break out of this sideways momentum. I remember discussing this range with you guys last week. And we talked about avoiding trading inside the range and looking for positions once the market breaks. They are the easiest positions to make. So the position breakout happened on Friday, a very strong rally, a pullback, and now a continuation. So now this week, I expect that this breakout was significant enough to warrant some further upside momentum, and we could be seeing yet a new high being formed in oil prices this week along these lines. And assuming this channel holds, then there's still more room for upside with a target somewhere around this area here. So it's somewhere around $86.34 per barrel of oil. So there's still more room for upside potential. So after breaking towards the upper side, I expect to see the market making this move and printing yet another high that we haven't seen in a while. So European equity indices have been also pushing higher to try and form another all-time high. So we had a breakout of this trend line here, a dip and then a jump. So it seems highly likely that the market is still within some form of consolidation. So if we were to adjust our consolidation here, what we have is the market, yes, forming higher lows. And then for the highs, we can adjust this trend line to reflect the new reality or the new data we have here. And now this is what we have in this market. So if I was to remove this, then the picture would become more clearer. So we want to trade on the lower trend line. So if the market was to do this, then the idea is to look for a potential bullish position and continue enjoying the bullish momentum. So French 40 index is currently attempting to make a run on the lower side. So you can see the attempts that were made last week where the stock market attempted to break towards the lower side on Friday, but still found support. And today it's attempting to break again. So the idea is to wait, and if there's evidence of a break here, then we start trading lower. So for the UK 100 index, what we are seeing is a market that is now still within the flag. So if we keep adjusting to the new reality, then the idea is that the market continues trading within the flag and makes this huge drop from this area towards the previous low, which is somewhere around here. So last item is Bitcoin, which is about to form a new all-time high. So the last all-time high, 68,738, might be different from other platforms. It literally hit around 69,000. That's the consensus value. And now after this dip that lasted the entire 2022, 2023, we made some good recovery. And then the beginning of this year has been extremely bullish for Bitcoin. If you check from the opening of the year to date, the price is up 47%. So this momentum is expected to continue. Right now, we have just hit a new high of over 2 years, having hit the current price level. Just want to remove this. So we are at 64,900, potentially hitting 65,000 in the next couple of minutes. And we could be seeing the market gunning for that all-time high, which is so close. I would say it's what? This is around 6% rally. So 6% higher than this, we get back to the all-time high and potentially further momentum upwards as the supply shock factors get priced in the market. So that's it for the day. Thank you very much, guys. Thank you for your time, and I hope to see you on the next one. So as for the questions, I'll try and answer as quickly as I can. So first question from J Squad. Flower chart looks nice on you. Thank you. Difference between CPI month over month and CPI year over year, and which is critical to react to. So CPI is a consumer price index, which basically represents a basket of commodities that are consumed by the average household in an economy. So when you take the price of this basket and then you compare the price at the beginning of the month and the end of the month, you have the price increase for that month. So if you compare with the previous month, we can say that the price increased by this amount, and that's what we call month over month. So if you take the month of, say, February this year, and then you compare with the change that we had in February last year, then you get the year-over-year measure, which is a longer-term duration. So the year-over-year compares the change of that basket of goods and services between 12 months, whereas month-over-month compares within 30 days. So investors will tend to react to the longer-term measure because the policymakers will not use the month-over-month. They will use the longer-term measure, which is the year-over-year. So next question is from Apollo. Please comment on how to trade assets on all-time highs like US indices. What may have caused the bullish move on gold? Comment on bullish cryptos between trading CFDs and what coins you like. I am a Bitcoin maxi, so personally I'm into Bitcoin only. So Bitcoin trading assets on all-time highs. So if markets are on all-time highs, they tend to be extremely speculative, but also extremely risky. So given the tools available for you on the MetaTrader 4, MetaTrader 5 platform, or even the equity app, you are able to ride these waves. So when markets are behaving like this, they tend to be highly volatile and they can make big moves within a very short period of time. So the idea is not to oppose these extremely high prices. The idea is to continue benefiting from them. So if you're the one kind of a guy who is trying to be the guy who short the market in the big short, so you don't want to be that guy because timing the market tops or bottoms can be really expensive and it can be a really tough job. So we know that the market will eventually correct, but before that happens, this bullish momentum is likely to continue extending. So the idea is to wait for pullbacks. Whenever there's a pullback, we continue enjoying value entries in the direction of the trend. And if you happen to see the market now showing signs of weakness and moving in the opposite direction, then you switch immediately and start following the new trend. On gold, do you see correction in prices today? Honestly, I don't know. But from my trading experience, if there's such a big move challenging a major resistance that hasn't been broken for a while, the likelihood is that gold breaks that resistance. Gold has a habit of decimating resistance and support levels time and time again, and I think it will also break this resistance and potentially move higher. So it's kind of risky, so you have to practice proper risk management. And of course, observe price. Trade what you see, not what you think. So for gold prices, I expect, I'm just patient waiting to see what happens if the price breaks 2088. Before price breaks this, I don't think there's any reason to make an entry. So US oil is kind of similar to Brent oil. So when I analyze Brent oil, I expect the same behavior. So this breakout from that 3-week range is expected to be bullish and potentially get to $86 or even $87 per barrel. So a good question. If you're speculating BTC, do you think the current prices are reasonable enough to buy the asset or you wait? If you're a long-term holder, just buy. I think that's what I've been doing, but I could be wrong in the markets. Also, if you are a speculator and you're just trading in your trading account, not trading your Bitcoin, then the idea is to identify those price action patterns. And I think the momentum is really good and the fundamentals are very clean, basically showing the supply shock. So if you track the ETF demand or the number of Bitcoins that ETFs have been buying versus the exchange supply of Bitcoins, and of course, the number of new Bitcoins coming into the system through miners, then you realize the imbalance between demand and supply, then you'll understand the movement. So a few minutes ago, we were talking about what? 64,800, 900. Right now, it's 65,176. I think it's as clear as it gets for everyone. So thank you very much, guys, and I hope to see you on the next session. Thank you for your time. Remember, there's 2 new episodes, one on Bullish Banter podcast, and yes, we have another very interesting new episode on the Financially Incorrect podcast. So make sure to check them out and share your feedback.